China's housing market storm, struggles, solutions, and the road ahead. In China, the housing market isn't just about bricks and mortar, it's a vital pillar of the nation's economy, contributing nearly a fifth of its GDP. However, the recent turbulence in this sector has set alarm bells ringing. In this article, we'll explore the human side of the story, unraveling the facts and figures behind China's housing market crisis. We'll look at what caused it, who's feeling the impact, and how the Chinese government is responding to this daunting challenge. A perfect storm of factors. The dark clouds over the housing market began gathering in late 2021. Several factors collided to create the perfect storm. The government, in an effort to cool the overheated property market, tightened the screws by raising mortgage rates and demanding larger down payments. These measures aimed to rein in speculation and excessive borrowing but had unintended consequences. Simultaneously, the broader Chinese economy showed signs of fatigue, exacerbating the housing market's woes. The collapse of major property giants, Evergrande being the most prominent, added to the turmoil, raising doubts about the sector's overall stability. Banking on uncertainty. Banks in China are grappling with their share of woes due to the housing market's downturn. They are witnessing a double whammy. First, they are losing money on loans extended to beleaguered property developers. Second, there's a noticeable decline in mortgage lending. The consequences are grave. According to S&P Global Market Intelligence, if 50% of the 38.6 trillion yuan of outstanding mortgages in the sector see a 40 basis point reduction in interest rates after renegotiation, banks could lose a staggering 77 billion yuan in annual interest income. The domino effect. The housing market's troubles don't stop at real estate. They create a ripple effect that affects several other sectors within China's economy. The construction industry, heavily reliant on property development projects, is experiencing a sharp drop in demand, leading to job cuts and financial stress. Additionally, the financial sector is navigating rocky waters as non-performing loans from property developers pile up, posing a substantial risk to the stability of the banking system. Government's response. To address the deepening crisis in the housing market, the Chinese government has introduced a slew of measures in recent months. These include lowering down payment requirements for first-time homebuyers, permitting existing property owners to renegotiate their mortgage rates, and extending financial lifelines to struggling property developers. Yet, the effectiveness of these measures remains uncertain, given the complexities of the property sector's challenges. The road ahead. The housing market downturn presents a formidable challenge for the Chinese government. Its significant contribution to GDP and employment makes the sector a linchpin of the nation's economic stability. Striking the right balance between financial prudence and sectoral revival is a delicate task, and the outcome will have profound consequences for China's economy as a whole. The housing market's fate is inexorably linked to the well-being of the broader Chinese economy, turning it into a global concern. As the story unfolds, we'll discover whether the actions taken so far will be enough to navigate these turbulent economic waters. China's housing market storm, struggles, solutions, and the road ahead unveils the human dimensions of a complex issue. The fate of millions of homeowners, workers, and investors is tied to the health of the housing market. As China's government seeks a path forward, the world watches closely, knowing that the outcome will impact not only the nation but also the global economy. In this era of economic uncertainty, the resilience and adaptability of China's housing market will be closely observed by experts and ordinary citizens alike.
Thanks for watching. KudosKuber bless you with fame and wealth.